The African Reserve Bank made a decision to raise the repo rate by 50 basis points up to 7.75%. This is double what some economists had predicted, making it the 9th consecutive increase since November 2021. To help us understand how the repo rate increases affect you, let's bring in Dick Forslund from Alternative Information and Development. Dick, appreciate your time this afternoon. Now, the South African Reserve Bank has raised the repo rate for the 9th consecutive time since November 2021. What do you think why have they taken this decision, and what factors have they considered?
I think good afternoon to all your viewers. I think that the main or maybe only reason, or the main reason, is that they are following the Central Bank of the United States, which increased their internal bank rate or their repo rate with 25 basis points just some 2 weeks ago. And then the South African Reserve Bank follows suit. They also increased their repo rate in order to compete for fast-moving capital. The only surprise maybe is that they didn't this time follow by the same increase, 25 basis points, but the Reserve Bank governor or the Monetary Policy Committee, they added and they doubled this. And maybe you must blame, or you must put that on the account, with all respect, on Mr. Kanyaho's personality, or that the Monetary Policy Committee want to show that they are best in class. But I mean, this is of course something that will block economic recovery this year. I think we can say that 2023 now is a lost year. As you remember, the economy shrunk last quarter last year with 1.3%, and now the whole prediction of the growth this year has been counted down, or sort of the forecast of what the economy will grow this year is close to zero now. And maybe this repo rate increase was the thing that made it go over to minus. We will see, but I mean, it's to the detriment of the local economy.
So you're obviously against the increase in the repo rate, but what are the alternatives that are available to the Reserve Bank governor, and certainly the board of the committee that makes that decision?
Well, the alternatives are of course far-going, because free money trading or free capital flows and the capital markets of South Africa has been deregulated over the past decade more and more. If you have such a situation where the currency trading is completely or almost completely free, then any international event can trigger an outflow of dollars, and the rand will depreciate. It will fall in value towards the dollar. So the obvious alternative is, of course, to start to impose different kind of regulation on money trading, or over 90% of all trading on financial market, it is in currencies. So speculators and financial investors, they are sort of trading currencies between dollar and rand, between dollar and yen, and send back again to euro, etc. That is the main trading taking place on financial markets. And if you think that is a good situation, or that is how the order should be, then you are going with the flow, so to speak, and that is what the Reserve Bank is doing. They should impose capital controls. They should, for example, introduce speed bumps in money trading or currency trading, so that if you come into the country and you change your dollars for rand, then you will have to wait for 3 or 6 months before you can do the opposite again. But I mean, this is this free capital markets, it's a pillar in the Treasury's current macroeconomic framework. So you have really to rethink if you should sort of go for an alternative to this. But I mean, if you think about the rate of unemployment in South Africa, and traditionally, when you have a recession like this, then you should decrease the interest rates in order to stimulate the economy. But our Reserve Bank is doing the opposite. And it speaks to me that the financial market or the finance capital is in charge. They have the supremacy over industry in the country.
Well, one of the implications of increasing the repo rate is that it's going to have an implication certainly on borrowing, but it's also going to have an implications on those that have already borrowed and need to pay back.
Yeah, I mean, you mentioned that this is the 9th interest rate increase since November 2021. It's been an increase, I think, by 3.5 percentage points since then. Compared to then, someone who has a bond on a car for 250,000 rand is now, compared to November 2021, this person is paying 595 rand more per month for this bond on a car. I mean, it sucks in billions of rand. If you imagine how many people in South Africa have a bond on the car or a house loans, tens of billions of rand is in addition sucked into the financial industry, and that is taking away effective economic demand in the economy, the demand for goods and services. Instead, this money will circulate in the financial system and make a very small minority happy for what is happening. But it means that there will be less economic demand to buy goods and services. So it gives an impulse to increased unemployment. That is what recessions are creating, and this is what lower economic demand is creating. So I don't know what the Reserve Bank has in plans now, because if they should react to every increase rate of the US dollar or any international events or any downturn of the value of the rand in this way and not having capital controls, well, then the economy will be in permanent recession. And politically, I think that situation will not be stable. It will not be permanent, so to speak. But we are looking forward to more social upheavals in the country. So the policy has to change.
If you allow me to ask one last question. You gave us that illustration of somebody who bought a car a few years ago for 250,000 rand and is now paying an extra 595 on that repayment at the moment. But talk to us on the implications of the actual repayment. Can we expect a lot of defaulters that have already borrowed?
Yeah, we already have defaults. We have the households. Over 60% of the households are 60% of the average household income is now used to pay back debt, and we have an increase of people falling behind of the debt, especially people in the range of having a monthly income or a household income between 8,000, 15, 20,000 rand. So people are behind, and there will be more defaults on debt. And I can say also, when it comes to small firms, to small and medium-sized firms, a cost is a cost. And many of these firms, of course, are also indebted. And when they get this interest rate hike on their loans, one measure they can take is, of course, to increase prices on their goods or services. So it's not sure at all that how much this really will dampen inflation in the country, especially as the inflation is not coming because of a massive spending on goods and services in South Africa. It's the opposite. It's coming from the outside. So this is all about protecting the value of the rand and to appease the financial industry and financial speculators. And that's what you have if you have a free market policy when it comes to capital flows and financial speculation.
Forslund from the Alternative Information and Development Centre. Appreciate your time this afternoon.